Welcome to FinBot Insights. Today, we are deconstructing an alternative investment thesis for MicroStrategy. It is an argument that asks us to look past the daily noise of market charts and instead focus on a more fundamental value proposition, a corporate strategy that is deliberately designed to systematically outperform Bitcoin over the long term. This sentiment really captures the central conflict we are going to explore. It perfectly highlights the tension between the stock's very pronounced short-term volatility and a disciplined long-term strategy that is centered entirely on value accumulation. Now, the prevailing view of MicroStrategy is for the most part quite simple. Most see it as a leveraged proxy for the spot price of Bitcoin. This perception means that its daily performance is expected to just amplify the immediate price movements of the asset, which really reduces it to a tool for short-term speculation. However, the thesis we are examining today proposes a fundamental shift in that perspective. It argues that the true measure of MicroStrategy's performance isn't the volatile daily spot price, but rather an underlying metric of intrinsic value known as the floor price. To really understand this thesis, you first have to grasp the concept of market net asset value, or MANV. This represents the total market value of the company's assets, and that's primarily its substantial Bitcoin holdings. Think of MNAV as the bedrock for the company's entire baseline valuation. And from that MNAV, we derive what's called the MSTR 1.0x floor price. This is a theoretical price per share, where the company's market cap becomes equal to its market net asset value. In short, this floor price represents the stock's pure asset value, completely stripped of any market premium. So now, let's put this thesis to the test using some recent data. The analysis compares the growth of this theoretical floor price against the actual price appreciation of Bitcoin year to date. The analysis starts by establishing a very clear baseline, using figures from the beginning of this year. At that point in time, the calculated MSTR floor price was $148, while the price of Bitcoin itself stood at $93,000. And the results of this year-to-date comparison are quite striking. The MSTR floor price, which is driven by the company's continued accumulation of Bitcoin, grew by 45%. Now, over that exact same period, the spot price of Bitcoin appreciated by a much smaller 15%. The result is the central finding of this entire analysis. The methodical growth of the underlying MNAV led the floor price to outperform Bitcoin's spot price by a net 30 percentage points so far this year. This is the core piece of evidence that supports the thesis. But there is a crucial distinction that we have to make. This theoretical outperformance is not the actual return an investor would have realized. You see, the market reality is more complex, and it is defined by the premium at which the stock actually trades. This, of course, leads to a very logical and critical question. If the company's underlying value engine has generated this level of outperformance against Bitcoin, why isn't that return directly reflected in investor portfolios? Well, the answer lies in the premium that's paid over this floor. It is absolutely essential to differentiate between the theoretical floor and the actual market price. The floor is the baseline value derived directly from the assets. The market price, on the other hand, is where shares are actually bought and sold, and it consistently includes a variable premium that investors are willing to pay above that baseline. The long-term thesis is built on a process called premium accretion. Here's how it's supposed to work. First, an investor buys the stock at a premium. Then, the company uses capital to acquire more Bitcoin, which increases the amount of Bitcoin per share. This action systematically raises the MNAV floor price. So, over a sufficient time horizon, this rising floor is projected to grow and eventually meet the investor's original entry price, effectively absorbing the premium that was paid at the very beginning. Therefore, this investment thesis is not a tool for short-term speculation. It is a long-horizon wager on a corporate strategy of disciplined and continuous accumulation. The entire goal is to create underlying value at a rate that will, eventually, outpace the very asset it holds. This is the ultimate conclusion of the analysis. The entire thesis rests on one assertion. For the long-term investor, daily spot price fluctuations are just noise, while the steady upward trajectory of the floor price is the signal. So, to summarize, this strategy is really a wager on several key conditions. It depends on the company's continued ability to accumulate Bitcoin, It requires an investor horizon that is long enough for that premium accretion to actually occur. And it relies on the core belief that this operational strategy will generate superior returns to simply holding the asset directly. Success is therefore a function of patience and a focus on the underlying mechanics, not market sentiment.
This leaves us with a final, framing question. Does a corporate strategy of patient, methodical value accretion present a genuinely superior alternative to the more common approach of just chasing speculative price movements in a volatile asset class? The answer to that question will define the success or failure of this thesis over time.
If you found this analysis valuable, we invite you to like this explainer and subscribe to FinBot Insights for more data-driven content. And a reminder, this content is for informational purposes only and does not constitute financial advice. You should not trust the opinions of social media influencers, and that includes this channel. It is absolutely imperative that you conduct your own thorough research before making any investment decisions.